Hello. Trading has closed on August 8th, 2022. Start with our disclaimer, go over our calls, and make some predictions for tomorrow. It's my trading plan for Tuesday, the 9th of August, 2022. Remember, I can be wrong. Any trade you make should be at your own risk. Look for the pattern with the early low, but so we could gap up. That's what this is. Tomorrow should have the early high. Here's what we said. We said most of the time the late Friday rally continues into Monday's open. We said if it didn't, there were all kinds of trouble, but that became moot, and we still could make 5 waves up on this rally. What we didn't say was after gapping up to new highs, we'd reject the break by closing under all these prior highs. It's a negative pattern which gets invalidated if you gap and promptly overtake this high. But it's not all bad because despite dropping all day, we couldn't take out these lows. And that's positive, but of course if you gap either direction, promptly take out this low, all that positivity goes away. Now, MEJT generated some new targets, 41, 44, 13, most likely to print tomorrow. That's only 4 points away. That shouldn't be too hard to do if it's the market's intent to go higher. We have an optional target, 41.84.55, it's 40 points higher than that. Doesn't have to print. But if it doesn't print by tomorrow, we'll just forget it because it's optional. So these MEJT things are saying we go higher, but again, if we gap down smartly, we just forget about that. And gapping down smartly remains possible for a number of reasons. Just to go over this, we said this drop is false. MEJT said this breakup was false. Now it says this drop is false, but only requires us to go to this line. And we today completed 9 bars of setup with DeMark's system. And you don't have to turn around after 9 bars, but it's a common place for a move to end. It doesn't mean it has to, but it's resistance. And that's not the only resistance. There's all kinds of ways to count this, but here's a big trend line. We went right up to it and then reversed. And as I've said before, when you do that, either you gap over the trend line or the trend line wins. By the trend line winning, I mean if you don't gap over it, but you break over it without the gap, it won't stick. Usually pretty soon it's going to retrace to the line. So all, with quotes around it, all the bulls have to do to show they mean business is to gap over today's high, which would overcome resistance, take us much higher. A break of this line would take us much higher. But it's now possible to count 5 waves up. I can't make the fibs work, but maybe there's some count I missed, and the fibs don't really have to work. So we have 9 bars of setup for DeMark, 5 waves up, even though I'm not convinced this moves over, and the rally right up to resistance. So the question remains, how do you count the rally? The short answer is I don't know, but there's one possible count, not the only one. It says we completed wave 3 here, and if you look at the blue count, you have an A, a B, and a C, and wave A and wave C are essentially equal. So that could be the end of the 4th wave. And if we get a 5th wave up, there's no reason why I couldn't gap over that. Not that it has to. So we have a lot of things pointing up, but none of them excuse the fact that we stop right at resistance and have to gap over this high to continue the rally unabated, even though I don't think it's over even if we drop tomorrow. When you have a number of things pointing higher like that, you don't go higher, and particularly if you gap down, the indicators can fail in grand style. So if we don't gap up smartly, take this out, I think there's a very real chance we have a big drop. Tomorrow's pattern has the early high we could gap down. Typically it's a rally day with a high and a fine lower. Failure is a straight line drop. There's a slightly higher MEJT target. Unless we gap down smartly, the rules call for it to print. There's an optional target 40 points higher than that. It doesn't have to print tomorrow, but will a high percentage of the time. If it doesn't, we'll forget it. We gapped up, hit trendline resistance, and closed under numerous prior highs. This can be interpreted as a rejection of the break to a new trend high. Gapping over the trend line would invalidate the negative consequences of that and put the bulls back in the driver's seat. But if we can't gap over it, I think lower prices are likely, and any rally over that trend line should retrace, most likely fairly soon. When these targets fail, particularly when you come that close and don't hit them, they can fail in grand style. So we'll have to see where we open before committing any money. We gap over this, I don't think the rally's over. But if we can't, even though I have higher targets, I don't like this rejection of the break to new highs. And we could have a pullback, which could be a significant pullback. We'll see how we open. Tomorrow has the early high, and that's today's call.